Yeah, we've been in a supply deficit for what, 5 years now. That started to come to a head. Whatever available supplies had been used up. And as people understood this was happening, demand increased. What the mines are producing is roughly, call it 850, 900 million ounces. And it looks like this year, we're probably going to end up with a demand of 1.3 billion ounces. So
Mm.
there's your shortage. The only way to adjust the supply and demand, the only way to ration demand and increase supply, but slowly, because mines can't increase supply quickly. The only way to do that is to increase the price. And that's what you're watching. The paper markets are beginning to break. And we're moving toward more of a, like you said with that commercial, I want my money and I want it now. We're moving toward a cash and carry market. The Asians do not trust contracts. The Asians want to buy something and have it delivered. When people ask me, how much should I put into gold and silver? My standard answer is whatever you don't want to lose. The gold to silver ratio got as high as 120. Now it's what, 63, 64, something like that. Silver comes out of the ground at 9 or 10 to 1 versus gold. And for hundreds of years, it was discounted to 16 to 1. The reason it was discounted 16 to 1 from 10 to 1 is that it took 10 times the amount of weight when you're moving either gold or silver. It took 10 times more silver versus gold to move the same amount of capital. So because it was more difficult to move silver, man discounted it to 16 to 1. Then along came COMEX in 1976. The suppression scheme started, and silver's much easier to suppress. It's been suppressed for the 50, that 50-year time frame. And now that looks like it's beginning to unwind. I mean, I would not, if you've got silver and you're wanting to convert it to gold, I'd do it in tranches. I'd do it in 4 tranches. I'd probably do a quarter when we got the 50 to 1, a quarter at 40 to 1, a quarter at 30 to 1, and then the last tranche of what you want your final mix to look like. You do that final tranche based on your gut. The bottom line is gold nor silver can bankrupt. They cannot default in a world that is entering a default phase. And then, of course, you had the Hunt brothers in the late, 1978, 79, 1980. They tried to corner the market. They got greedy. Had they done it more on a cash basis, they couldn't have been pushed out. But what happened is they got leveraged on COMEX, and COMEX changed the rules and said, we will not accept any buy orders. You can only sell. And silver went from $50 to $10 in what, 6 or 8 months' time. So they crashed silver, bankrupted the Hunt brothers, and that was done because the Hunt brothers used too much paper.
The silver market is experiencing a historic physical supply crisis, with annual demand, 1.3 billion ounces, vastly outstripping mine production, 850 to 900 million ounces. This 5-year deficit is now breaking the paper trading system, LBMA, COMEX, where for decades banks and central banks suppressed gold and silver prices via massive short selling and unbacked paper contracts. This suppression wasn't for profit, but to maintain confidence in fiat currencies and enable unlimited government debt.
I've heard numbers as high as 300 to 1. Also understand that ETFs were created, and as soon as they came out, I said this is going to act as a siphon for capital that was going to go into real metal, but now it's going into the ETFs. And if you look at their prospectuses, they don't have to own real metal. Now the thermometer is breaking. The paper contracts, they sold way, way, way too many. And we're at the point now where people are standing for delivery. And guess what? The metal doesn't exist to supply all these contracts that have been sold short. And now you're seeing price go higher, and these banks are losing billions of dollars. Once confidence breaks, then you've got a problem in the credit markets, because credit runs on trust, runs on confidence. Nobody's going to lend. I mean, talk about uh, an old story. Think about Wimpy on Popeye. I'll gladly pay you Tuesday for a hamburger today. If credit hiccups or if credit ceases, the entire world, everything you do, everything you touch, runs on credit. The real economy runs on credit, and so does the financial world, the financial economy. So once this affects credit, then it's game over. You'll see markets close, and that's where the great taking will take over. How China, unofficially but official reserves are at least uh, 35,000 tons. And they say they've got what, 3,000 tons. I mean, they've done it. If you look at what's gone through Shanghai over the last 15 years, plus their production of 400 tons per year, they're so far above 3,000 tons of reserves. It's not even funny. I would just say that the East, Asia, China, Asia, India, uh, they know the game is up. If we understand that there's, a fiscal mathematics problem in the Western world, they got smarter people than we are. They know. And just look at the BRICS. How many countries have joined the BRICS? 140, 150 countries? That's more than half the world. Well, I mean, way more than half the world geographically. They are moving away from the dollar because they understand that the dollar is going to basically default. And when I say default, there's two types of default. There's non-payment, which that'll never happen. But then there's overissuance, and that is happening.
Mm-hmm.
Overissuance is inflation.
Now, Eastern demand, China, BRICS, for physical delivery and rising distrust in paper contracts is exposing these shorts, leading to potential failures to deliver. This isn't just a metal story, it's a systemic confidence crisis. When the paper market for silver fails, it will trigger a cascade into other commodities and credit markets, threatening the entire financial system. Gold and silver are not investments, but safe havens from a failing global fiat currency regime headed for inevitable default via inflation. Miners offer leverage but come with confiscation and nationalization risks, making physical metal held privately the safest strategy for wealth preservation.
I'm not saying that silver and gold are going to become come currency. They're not going to you're not going to ever see convertible paper monies that are convertible to gold and silver, because they've already figured out when they do that, it converts, and then their supplies are wiped out. But I do believe that you're going to see governments back currencies with gold and silver, but not be convertible. They'll be ratio back, 20%, 40%. I mean, I don't know what the number is going to be, but I do believe for a currency to be trusted, it has to have some sort of backing. And that's what the BRICS are doing. That's what the BRICS have been talking about, going on what? Understand that this has been going on for 50 years, or at least since 1986. I'm sorry, 1976, when the COMEX started and they had the paper contracts. Understand that silver is an extremely small market. Even at today's prices, I think the total global production is only 40 or $50 billion a year, which is nothing in today's world. I don't believe that it was profit oriented to begin with.
Mm-hmm.
The central banks colluded around the world to lease gold and have that gold sold into the market to suppress the price. The reason that was done is because gold is the anti-dollar, if you will. It's the anti-fiat. It's direct competition for fiat currencies. Now, if you suppress gold, you can't let silver skyrocket. So they suppress silver, but silver is easier to suppress because it's such a small market. And they got used to being able to smash the price, scare the speculators out, and then they made a profit. But that's simply Italy taking an Eastern mindset and saying, "Hey, it's our gold. We want control of it. We want it within our borders."
Hmm. Yeah, for
And
sure.
you could go back, Daryl. You could go back to what was it, 2013, when Germany said they wanted 300 of their tons back that was being held in New York, and they were told, "Oh no, this is going to take like 3 years." And I did the research, I wrote an article that 300 tons could have been transported on four 747 cargo planes. Those can hold 95 tons per plane. So they could have done it in what, 2 weeks, three planes, and then not a fully loaded third plane. Now, by 2016, 3 years later, Germany got their gold, but guess what? It was not their gold. What they deposited was returned to them with different registration numbers. It was not the same gold. But the United States had 3 years to source 300 tons. The more they print, the lower the value of the currencies, and thus the higher price, if you will. Gold and silver do nothing. It's the currencies that go up and down. And the currencies are devaluing greatly, and there's your price explosion. We've been trained, if you will, from 1971 to believe that the dollar is still. You'd be amazed at how many people still believe that the dollar is backed by gold. It is backed by nothing. It's backed by the full faith and credit of an insolvent institution. This is the end of, if you want to call it the fiat cycle, whatever you want to call it. This is the end of fiat. This is the flame out on fiat versus gold and silver, which are real money and cannot default. Yeah, no, that's a very real possibility that you see some nationalizations. Uh, I believe that equities in North America are probably most at risk because, I mean, look at the finances of the US, look at the finances of Canada. It would just make sense that they try to, uh, they try to confiscate gold in the ground. If you go back to the year 1900, mining companies resembled what utility companies are today because they were mining money, and they would they would pay out a good dividend. They were very stable, solid. They were widow and orphan type stocks. As far as going forward, that it's going to be much different because we're not going to be in the world of 1900 going forward because as far as mining concerns are concerned, um, miners are going to be they dig money out of the ground, and if that's happening in a backdrop where fiat currencies are failing, and we get to the point where gold and silver become very scarce for investors for purchase, what's your alternative? You're going to have to purchase mining companies if you want exposure to metal that you can't buy. And that's assuming that markets stay open. And I don't assume that, but it's assuming markets stay open. Just understand that if you're buying a miner, and there's all types of miners. I mean, there's explorers, there's juniors, there's majors, from the bottom of the chain all the way up. Um, the more senior you get, the less risk there is, but you also have to look at the geographical area that your mine is at. I mean, is it at risk of confiscation? What I'm trying to say is there's much more risk in miners than there is in the metal itself, but it may become the only choice if you can't buy gold or silver, if it doesn't exist to buy.